Discussions in this show should not be construed as specific recommendations or investment advice. Always consult with your investment professional before making important investment decisions. Securities offered through Cambridge Investment Research Incorporated, a registered broker-dealer, member FINRA SIPC. Investment advisor representative, Cambridge Investment Research Advisors Incorporated, a registered investment advisor. Financial planning services through Andover Advisory Group, a registered investment advisor. Cambridge and Andover Advisory Group are not affiliated. Cambridge does not offer tax or legal advice.
Good morning, Justin. I want to thank you for your hard work. The information is a big help, and I appreciate what you did. Enjoy the show.
All right. Thank you.
Okay, that's great to know. Thank you for the information.
You're very welcome.
Okay, Jeff.
Okay.
Thank you very much.
You're very welcome.
You're right on the money, Jeff. How are you doing this morning? Thank you.
Well, those are good questions. Hopefully that helps.
Yes, thank you so much.
You're very welcome. You're going to hear stuff here that you don't hear anywhere else on radio.
And you don't forget it.
Welcome to another edition of Talk Money. If you are new to the show, let me introduce myself. My name is Jeffrey Shank. I'm a chartered financial consultant and the owner of Andover Advisory Group, a registered investment advisor. And for over 25 years, I have provided effective financial advice to individuals and to businesses. Thanks for tuning in today. Just a little bit about the show. Our mission here on a weekly basis on Talk Money is to help improve your money IQ. We do that in several ways, and by providing information about important things that are happening in the financial markets, or with regard to things like taxes or other rules that are changing that are going to affect your personal finances. And we also give you some tips, some regular tips on a regular basis that you can actually use, take action on, and use in order to help you and your family meet the challenges of planning for your financial future. Good morning, Lou. How are you this morning?
Very good. How are we doing today?
I'm doing great. Thank you very much.
Can I throw you off the path right at the beginning?
Sure, as long as it's not football related.
No, it's not football related. We did the football before the show. It's not football related. And talking about changing rules, I purposely stay out of this storm, but you can't help but see headlines, and I'm getting my Globe emails this morning. How big a threat is Omicron?
That's a great question.
Yeah.
And I've gotten to a debate with some folks over the last week or so. And the problem with that, I think.
And I mean, threat economically, we can debate viruses all day long if you want to, but it just has that feeling that health officials and government officials are kind of digging in on this one.
Like March of 2020.
Yeah.
Doesn't it? It feels like March of 2020.
It does.
Yeah. Yeah. And so I was saying that I've been, I started talking to different people about this, and the problem, I think, is that this has become a political issue. Mm. And I thought about it after having several discussions, and I guess that the thing that I want to stress is this is a public health issue. It's not political, and the Omicron variant is of concern to public health officials because of the number of mutations that took place in what they call the spike protein. So I don't want to get into the science. I'm not an expert on this particular area, but the concern there is that it could become more contagious and perhaps resistant to the vaccines that they developed. But we've got a lot more tools now, and we've got a lot more information, and so probably in a better place to contain it. But I believe your instincts are correct that if we don't get a handle on it early, then it could create a situation where we have similar economic impact as we did in March of 2020.
Yeah, you just get it. Just feels that way. Again, I don't know anything about the science of it. I just see government reaction. I see statements I see, it just has a feel to it.
But you know that the president of the United States did say that we're not going to have a shutdown.
Okay. Yep.
He came. He said
okay.
He said that. What were his words? Good. It was a good speech. He said that it's cause for concern, not for panic. And he said that we're not that he's not planning to shut down the economy at all. But
did he say we might have to slow it down for 2 weeks to flatten the curve?
Yeah, no, didn't say anything like that.
Nope, nothing like that.
Nope.
Yep.
But we're not there. We're nowhere near in terms of the number of infections and the rapid transmission that we were in March of last year. But interestingly enough, and I said it at the time in 2020, and I thought about it again when I heard President Biden mention it. Really, the president of the United States has little control over whether or not the economy is open or closed. It boils down to individual states, governors, and local health officials, really, as to whether or not businesses are going to stay open or close.
This has been a federalist pandemic, to be sure. One of the few bright spots of the pandemic was reestablishing states' power and community power over some of these things.
Yeah, exactly. Yeah. So it really and so what is, at least as an observer, what is interesting or maybe concerning to me is that it seems to be it's being detected rapidly in a lot of states, and so that could be an indication that it might be more transmissible than other variants. Let's put it that way. So yeah,
so it's legitimate to be wary.
I think it's legitimate to be concerned, and it is obviously having an effect on the markets. In fact, we're going to discuss that today. I've got the latest updates for November, and I think it is, as an individual, I think the best solution is to protect your health and your family's health, and stop making this a political issue. If it's if it's in your state, if it's in your community, hey, wear a mask, right?
Yep.
If you're not vaccinated, be very cautious, for sure. And we actually had some stories over the weekend. Some people and family members, not close family, but extended family, who have actually not. I'm not saying that they have the new variant, but they did become COVID positive and symptomatic, and fairly seriously ill. And here was the reason that I think this story is important is because this is in New Hampshire. They went to a local New Hampshire hospital and couldn't get treatment. They were effectively turned away because they were sitting for so long. They finally gave up.
A capacity.
I won't mention any names.
Sure.
Of any facilities, but
lack of treatment issue.
I'm sorry.
A capacity issue or a lack of available treatment issue?
It seemed like it was capacity.
Interesting.
As I understand it, and that's just third party. So
yeah,
take it for what it's worth.
But it was the market's reaction. You brought it up. It was the market's reaction recently that perked my ears up on it. Now, that's when you stop paying attention, because you assume the market, and I'm using the generic term here, but you assume they know something,
Could be, and that just could be an excuse for some investors to take some money off the table.
Yes, that's true.
I mean, that's a possibility, and I think that there are a lot of reasons why the markets could be selling off as of late. And again, we can talk about that a little bit more. But so we're going to talk about that today. And every year, the College Board, Lou, does a survey of colleges, and they publish a college cost data, what they call trends, college cost trends. And this year's report came out about a month ago, and I titled this segment, no surprise, college costs are going up. But there's actually a surprise in this year's data that I wanted to point out. And so the College Board does publish these figures. They're based on a survey of about 4,000 colleges across the country. Individual regions obviously are going to be different. The Northeast, for example, is one of the higher average costs of college. The Southwest and the southern part of the country, generally speaking, are lower.
Mm-hmm.
But here's the thing, right? Over the past decade, average tuition fee, room and board costs have outpaced the CPI by about 11% in total at public colleges, and about 14% over and above increases in the CPI for private colleges.
Yeah, at one point, I remember, I don't know if it's still true, at one point it was the most inflationary sector in the U.S. economy, even more than healthcare.
Yes.
Yeah.
Exactly. It was consistently the way when I was doing the planning for clients, I apply or had been applying about a 6% inflation increase, annual inflation increase, 6%, which is significantly higher than the inflation rate in the economy as a whole. But this year's numbers, but that has moderated, and this year's numbers are actually showing a divergence from the overall inflation rate. And I actually have a couple of slides, Lou, to show you the specifics. Right. And so so they separate this into three categories:
Mm-hmm.
public colleges, in-state, and out-of-state.
Sure.
Those are two categories, and then private colleges. And again, this is nationwide average. So when you look at this, keep that in mind. So for in-state students at a public college, the average went up about 1.6%, less than 2%, Lou.
Yeah.
For tuition and fees. Room and board, roughly 2%, just a little under 2%. And so you're looking at a total cost of attendance, on average, nationwide, for in-state students, about $27,330, and that's an annual rate.
Yeah.
So you're still talking, for a public college, in-state, about $100,000.
Wow.
Yeah.
Wow.
Lower in some areas of the country, higher in others, but roughly $100,000 if you're an in-state student. Then we look at out-of-state students. They pay a little bit more, but those increases, a little bit less,
right,
for tuition and fees, about the same for room and board.
Right.
Because that's really the only difference. The only difference for in-state, out-of-state students is the tuition. Room and board is the same for everybody.
Right. And
total cost of attendance, about $44,000.
Approaching $200,000 for 4 years. Good Lord. Yeah. At a state college.
And I guess that's the bad news. The good news, Lou, is that if your son or daughter is in school right now, and you're looking at the next 4 years, you can at least breathe a sigh of relief that it's not going to be 6% higher every year for 4 years.
Right.
Right.
Yep. Yeah, those are modest cost increases given the state of inflation.
Comparatively speaking. Exactly. Yeah. And private colleges. And, I did, as I was looking through this, I noticed that the difference between, and I have actually made note of this as I'm working with clients and we're looking at the total cost of college, that the public costs are, or the gap between public costs and private schools, public schools and private schools, seems to be shrinking. That's just my take on it. I don't have any data to support that, but it just seems like it's starting to shrink, that difference in cost.
Yeah, seeing that this morning, it seems a lot smaller than I would have estimated it is, the gap in between.
Yeah. And again, this is nationwide.
Mhm.
I mean, there's schools, and including the elite schools, where you're looking at ponying up $70,000 a year.
Yeah.
For for your college education.
Yeah.
But of course, that's the sticker price, Lou.
Yep.
That's not the net cost. Well, I mean, I was going to compare it to buying a car, but these days you can't. You can't do that.
Yeah.
You can't buy a car, so we don't have any.
Yeah.
We can't make that comparison. So tuition and fees were, again, just about a 2% increase, and we know that the CPI year over year has been more than double that.
Right.
And so that's the good news. And if we take a closer look at these costs, again, comparing it to, and in fact, I want to just back up. So for a out of state, that's in state, out of state student, we're looking at total cost of $44,150.
Yeah.
And then for a private college, $55,800. There really isn't that much of a difference.
No.
I mean, it's not that $12,000 isn't a lot of money.
Is there and maybe this is where you're going, with a private institution, there's government and private financial aid. With a state institution, there's
merit scholarships that are available in public institutions, but that money is small compared to private colleges. So private colleges have a lot of endowments, a lot of money, a lot of grant aid that could be based on financial circumstances.
Yep.
As well as merit scholarships that are merit aid that might be available. And so that is exactly where I was going with this. It's quite possible that if you're comparing an out-of-state tuition cost and a private college, you might actually end up paying less going to a private school because they might have much more money available for you.
Yeah.
And if you can show financial need, that can be a significant factor in determining how much aid you might be able to get. So if
I'm feeling pretty good about the price I got for my son at UVM, I'm telling you. Looking pretty good.
I think most parents look at these costs after they've put their kids through school and say, "Oh, I dodged a bullet. I'm glad I got it over with."
Yeah.
As am I. And so you might actually be better off applying to, or you might be better off as a net cost. So this is the sticker price, but after you figure financial aid, the net cost, which is really what you're going to end up paying, could be a lot less than a public school, because generally speaking, the public colleges and universities, they don't have the kind of money that a private college or university might have available to provide for financial aid.
Right.
And so I think when what this demonstrates too is when you look at the average cost, because we know in the Northeast that these numbers are not consistent with what kids are paying for college in New England. And so I think what this tells you, and my experience has been that there are parts of the country, colleges and universities, where you would consider, when you compare it to the average, when you compare it to what it costs here in the Northeast, that you can get as good an education going to a college in another part of the country, paying less for tuition and fees, and maybe even getting a similar financial aid package to reduce your overall costs and get a similar or potentially better education. So I think it is or what I typically recommend to clients is that they expand their college search and try to think outside the box and try to come up with alternatives that would be better suited for your son or daughter, that quite possibly could be less expensive, or a college or university that's looking for somebody that has the credentials that your son or daughter has, whether it be sports or some other skill in the arts, music, that sort of thing, that they would love to have them attend uh, their institution, and are willing to, not even in terms of scholarships, but just because they have some merit aid available, or because again you can show financial need, that they would be aggressive. Is that a word? They would be interested and willing to come up with some more help, some more financial aid, because they want your son or daughter to go to that particular school.
Yeah, and there are certain prestige schools here in the Northeast, but that only works for certain occupations and only works for certain schools. I mean, just if you're not going to Harvard or Yale and you can get a better price getting out of New England with a college, it's certainly something worth exploring.
I was talking to someone the other day whose son plays football, and pretty good.
Yeah.
And I just automatically said, "Oh, where's he going? Where's he going to go to college?" And he said he isn't. He's going to trade school. He said,
"Wow,
you're going to be an electrician."
Oh, okay. Well, we need trade people, first of all, and it can be a very good occupation.
I'm not demeaning his decision at all. That's probably a smart thing to do. He's not going to have $100,000 of loans when he leaves, and he's probably going to have a good paying job, and lots of opportunity to advance even within the company, or maybe even as a private contractor at some point in time. So that's not a bad choice, and I bring that up because there are alternatives. Not every kid should be going to college and taking liberal arts, right?
Well, as I told you a couple of weeks ago, the plumbers who put my new water heater in spent the whole time installing the water heater talking about their stocks. So it gives you an idea. And by the way, finding somebody to just come to the house and do it. The plumbing industry is a great industry to be in right now.
Yeah, exactly my point. All right, any of the trades, Lou.
Yeah,
any of the trades, skilled trades, electrician, plumber. Yeah, absolutely, no question about it. And so when it comes to the whole financial aid part of it, don't assume that you're not going to get financial aid because of your income or the amount of assets you have. It is fairly complex. It is changing. And so you should be aware of the changes. They delayed implementation of the FAFSA Simplification Act. Some of those rules have been delayed till 23, 24, I think. Mm-hmm. So we got a couple of years before they take effect, and you should know what those rules are, and you should know how changes that you make in your personal financial situation, repositioning assets, what your tax return is going to look like. You need to know what all these things are going to do to impact the amount of aid that might be available to you. And so many people just make the assumption that they're not going to qualify, so they don't even take the time to fill out the forms. That is a big mistake. Study after study shows that hundreds of millions of dollars are left on the table every year because families think that they're not going to qualify for aid, so they don't even apply for it. So take the time to understand how it works. We do have a service that we offer that will take you from start to finish and help you complete the forms in order to make sure that you are getting the most aid that might be available to you. So
one of the perks of my job is it's okay to ask the potentially stupid question.
Yes.
When you're applying for financial aid, and if you are you talked about having a certain skill set that might be attractive to college, or a certain demographic that might be attractive to colleges.
Yep.
Do you need to have an application in at the college to go through their FAFSA and financial aid application? Because applying to colleges is expensive. There's some money involved there, so you don't want to do more than you have to. But I would think that with a good skill set or an attractive student might do well just shopping around for different financial aid.
So as far as I understand it, I could be wrong, but unless you have a application in, they're not going to assess your financial need or make any sort of offer. I think that's what you're referring to. Now that might be different for an elite athlete, perhaps, where they're really looking for you to come to that particular school and are willing to at least talk about the potential. But actually, my experience is even with those situations, the school wants the coach who's recruiting you will tell you to get your application in as soon as. Oh no, actually, I take it back. Now that I think of it, there was a couple of situations where they just wanted to see the financials. Yeah. Once they saw the financials, they could give a better idea. So I don't know that they actually submitted a application for attendance.
But football teams, hockey, whatever, they're going to come out. They're going to come to you, and you're going to. But if my kid's a great tuba player, for example, or has a great mathematician, or has some sort of outlying skill set that might be attractive to a college, is there a way to determine what colleges are looking for these types?
So there is published data. Yep. There is published data that does help us to do that, and that is actually one of the features of the service that we provide. We will look at all the colleges that you're thinking about applying to and give you an idea of how, based on academic history and certain attributes, demographics, will give you an idea of who might be more interested in having your son or daughter come to that school. Yeah.
Very useful. Yeah.
Yeah. Absolutely. Yeah. So, hey, you want to take advantage of something like that? You want to talk about how it could work for you? Give us a call, use the toll-free number, send me an email, or just send a message right over Facebook. We would love to talk to you about it. And we do offer a no obligation, no cost initial consultation. So we can go over some of this stuff in that hour. And the last client that I met, to talk about the whole financial aid situation, their financial aid situation, and they have 3 kids in college at the same time.
Good Lord.
I said, you know what? At the end of this meeting, at the very least, you're going to be more knowledgeable about the financial aid process than when you first came in. So I guarantee that will be the case.
And even that low bar is worth thousands of dollars, especially to that couple with 3 kids in college.
I'm not going to put a speculate as to the value, but I'd say it has value. Absolutely has value and worth your time.
No doubt about it.
Hey, so let's take a quick break, and when we come back, we're just going to recap November and the markets, and talk about where we are and where we might end the year and beyond. So please stay tuned.
Whether you're saving money for your children's education, preparing for retirement, or deciding on the right life insurance plan, you can count on the professionals at Andover Advisory Group. Established in 1996, our company is responsible for providing financial planning services to individuals seeking sound financial advice. We create a comprehensive financial plan that serves as a framework for organizing the pieces of your financial life so that you can focus on your goals and understand what it takes to reach them. And a financial plan can help you prioritize. For example, how saving for college might impact your ability to save for your retirement. Having a clear perspective will allow you to pick the right strategies and confidently choose suitable products and services. Best of all, you'll have the peace of mind that comes from knowing that your financial life is on track. Call us at 978-691-5005 to book your free initial consultation. That's 978-691-5005. Hi, this is Jeffrey Shank, a chartered financial consultant and the host of the Talk Money Show. I've been helping my clients for more than 30 years, and now I'm going to help you. Join us to learn about the financial issues that concern you the most. You'll hear from the experts on a range of topics, get some great ideas, and it's all designed to help you make more out of your money. So tune in to Talk Money right here on Eagle News Radio.
Welcome back. So Lou, you were. I'm sorry. Did I say something?
No, I was just an affirmation. I was just checking in. Just yes.
Oh, okay.
Reestablishing communication after the break.
Oh, okay. We talked about a little bit the fact that the new coronavirus variant, and by the way, most everybody is saying it incorrectly.
Oh, okay. Did I?
I don't know, but we'll just and I don't know why it bugs me, but it's Omicron or Omicron.
Okay.
Omicron. That is how it's spelled, and that's how it should be pronounced. And
Omicron.
Omicron, right?
Yeah.
Exactly. So it could that could be a total waste of effort, because who knows? In another month, it might not be an issue. We won't be talking about it anyway. We'll be talking about a new variant.
Yeah, more likely it'll be the last issue, the previous issue, not the current issue.
But stocks, much to the surprise of I think maybe a lot of novice investors, people that got into the market because it was soaring and they had time on their hands, and during the economic shutdown, much to their surprise, the month of November generally lower. If you take a look at the indexes, only the NASDAQ was able to eke out a small gain. I do have a slide that does show you how things performed in November. So the Dow was down almost 4%. NASDAQ was up 0.25%. The S&P 500 was down just about 1%. The Russell 2000, Lou, which is a mostly represented, or it's a subset of the overall U.S. stock market, representing smaller companies, and which are really the largest overall portion of the stock market in terms of numbers of companies, was down 4%. 4.25%, and overall the global Dow was down over 4%. So we had a negative November, which is unusual, and it hasn't been the case for some time now. And it, generally speaking, it was sparked by this the potential for this new coronavirus to have an impact on the economies around the world. And that was
the way you termed it earlier as a potential excuse for a sell-off. And you didn't use potential excuse, but I think that was the essence of your point.
Yes.
Yeah.
Yeah. And I've said this before, and I think it's worth repeating, that institutions move the markets. Individuals basically are along for the ride.
Mm-hmm.
Now, there was some individual stocks, some individual issues during the pandemic that got particular interest by a lot of retail individual investors that did have an impact, at least on those stocks, and potentially did kick a lot of institutional investors in the butt.
Yep.
Because of a lot of retail investors using technology, using social media to band together to create basically a block of investors that challenged the institutions. Yeah. I think that was, I believe that was short-lived. I could be totally wrong about that, but I believe it was short-lived. And generally, the indexes are moved by large institutional investors. And so it's possible, just speculation, that some of those institutional investors looked at what was happening and have been thinking about maybe trimming their positions, and use that as an opportunity, use the coronavirus news as an opportunity to do that, right? And others potentially followed suit as a result, because we did talk about this last week, I believe. We talked about fundamental investing and valuing individual securities and valuing the market overall in order to compare the price of an investment, to compare apples to apples, to compare the price that you pay on average for a stock in today's market versus last year's market or 10 years ago, to kind of get a sense for where we are overall in the market cycle. And we did talk about how we are at very elevated levels, to the point where they challenge some of the peaks in 2000 and in 2008.
Right.
So there could be some underlying reasons, Lou, why we're seeing these declines, and that the coronavirus news might have just been a good reason to start taking some action. Well, and some fear. There's no question. There's some fear that probably played into this.
But I think people have been shopping for that reason for a while now, because the market has been good, but everyone's been looking at it, kind of with some trepidation about where the market and where the prices are now and when that correction is going to come. So the first legitimate concern that comes along is going to be a good excuse for a lot of people. And
let's not discount the role of the Federal Reserve and the renominated chair, Jay Powell, who said that the coronavirus variant could hinder economic recovery efforts. And at the same time, out of the other side of his mouth, still suggested that the central bank could end its asset purchase program sooner than planned, indicating potentially anyway that he has confidence in the economic recovery despite the variant starting to emerge.
Well, doesn't the Fed like to get its message across, but mitigates it so that no one overreacts? I mean, they obviously wanted to get the message across about the virus. Nothing drops out of their mouth without strong consideration. But then by the same token, it's like, okay, but don't panic.
Yeah. So I remember Alan Greenspan was a master at this, and he used a lot of words that everybody was trying to interpret on a regular basis. So he never really came out and said, okay, here's what we're planning on doing. He would just make these references, and somehow you had to figure it out. Jay Powell, on the other hand, he's pretty pretty straightforward. He just says, okay, here's what we're thinking, here's what we see, and here's what we're planning to do. And so he's not in fact, one of the things when he came on was that he wanted to be more transparent, and he wanted to be more specific with the language that came out of the Federal Reserve, because he thought that would be a better thing to do. And so he has indicated
he has to be responsible, because what they say affects the market and costs people and makes
absolutely
people
they have to be responsible. But that doesn't mean that they have to be
they don't withhold. You don't want them withholding. You don't want them couching it necessarily. You want to know what's going on. But again, the wrong phrasing here could be
or speak in a language that no one understands.
Yeah,
Vulcan or
yes, or Fed speak.
Well, that's what they call. That's why they call it Fed speak. Yeah, that's exactly right. Yeah. So that did play into some of the concerns, and that actually interest rates, as a result of that, interest rates started to go up a little bit. But since the emergence of this new variant, interest rates have plummeted. They're even lower. I think if you look at the end of November, anyway, 10-year Treasury was at 1.44. It went below that.
Yeah. Wow.
And the prior month we were at 1.55, and that may sound like a small change, but at these levels, that's a huge change. 11 basis points over that time period. Although when you look at 2020, December 31st, it was less than 1%, so we're still higher than that, but heading in the other direction, Lou. Which is kind of surprising.
Yeah, you don't want the 10-year going in that direction. So any move is a big move. That's an important number.
Well, when you say you don't want the 10-year going in that direction, depends on who you are and how you're positioned and how you're invested, Lou.
True. Yes.
So if you're invested in the bond market and you see interest rates start to fall, that's a good thing because the bond prices, the value of your bonds are going up. If you're borrowing money, you'd like to see interest rates to stay low, right?
Yeah.
And so and if you're if you're a growth company and you can borrow at cheap rates, well, that's a good thing for you too. So there's good and bad in everything.
What if you're a federal government?
I'm sorry, including the federal government
that needs to borrow money.
Yeah, this is good. Yeah. This is good news for the president and his initiatives because he can borrow at cheap rates.
Yeah.
But I was thinking about this this morning, as a matter of fact, because the Federal Reserve has been one of the biggest buyers, maybe not the only, but one of the biggest buyers of U.S. Treasuries because that's what they have to buy.
Right.
That's how they purchase bonds. They buy U.S. Treasuries, and they're talking about tapering and slowing down their bond buying program. And I started thinking about it and saying, who's going to buy U.S. bonds if and fund these new initiatives if the Federal Reserve isn't willing to do so?
Right.
And what effect would that have on rates if they don't?
Well, yeah.
At least in the short term, rates are not going up; they're going down. So I'm not. I don't want to alarm anybody, but if the Federal Reserve isn't buying, who's going to buy? Chinese?
Not me. Chinese. Yeah. Well, they have their own issues, but that's. But yes, why wouldn't they?
Why wouldn't the Chinese?
Yeah.
Because they're not happy with some of the policies or some of the rhetoric, I guess, that's coming out of the White House. They might be unwilling.
Yeah, well, you might be willing to extend the leash a little bit and then pull it back in for leverage.
Yeah, and besides, you can. Yeah. Well, anyway.
Let me derail you again. Let's go back to individual investors as opposed to institutions. When you were talking about that, I was thinking about the GameStop incident, and our individual investors finding strength in bonding and using social media, are individual investors making themselves more of a concern through cooperative effort again.
In this market, you mean right now? Or are you talking about
in general? They probably found the power with the whole GameStop issue, although that was largely institutionally driven too, I would imagine. But individual investors finding ways to bind through social media. I mentioned on last week's show, or maybe off the show, all I was reading last weekend was this drop was a buying opportunity. Everyone was like, what are you going to be buying on Monday?
Right.
And so that's social media banding individual investors together.
So here's my opinion, my learned opinion about this particular subject, retail investors versus institutional investors.
Yeah.
It's really what are they? It's really based on human behavior.
Yep.
And behavioral finance is an area of study where they have learned that people react a certain way, and I don't think it really matters that it is because of watching the news in the 1980s and finding out that the market dropped 25% and making decisions based on that slow leak of information, or if it's based on the ability to go on to a site and a forum and start seeing all kinds of opinions and information and suggestions that come across at a much faster rate. I don't think it really matters. I think that in the end, there's a fundamental human behavioral aspect to investing that really doesn't change over time. What changes is where you get your information how fast that information comes to you, how fast you might react to it.
Yep.
But everything is basically the same. And I think people get too enthusiastic about some of these individual securities. And at least in the short term, as of right now, some of those people got in at higher prices and wish they wouldn't have.
Right.
The same is true for some of the cryptocurrencies. And I'm not saying that cryptocurrency is not something that you shouldn't be investing in, but some of the prices, if you want to call it that cryptocurrency has risen to, and the volatility, some people got in when it was just $1. Others got in when it was 65,000. So those people that got in at 65,000 are starting to worry.
Yeah.
People that got in at $1, we really don't care. And so there's a dynamic at play, regardless of the technology involved, regardless of the social aspect or the ability of people to come together as a group, as a block, and start to trade or make a specific trade. Eventually, those individuals are going to experience the same thing that everybody has over time.
Yep.
And that could be a good outcome, could be a bad outcome, but you have to be careful. There is no sure bet. There is no sure investment, and you really have to look at it, do your homework, and make sure that you know what you're investing in, what you're willing to accept for volatility, what you're willing to accept for risk, and how much you're willing to lose in the process. Because if you don't do all those things, it's possible that the outcome could be very negative.
This is the herd mentality cognitive bias, where don't assume that numbers of agreement equals knowledge.
Exactly.
Yeah.
Lou, that's a great way to put it.
Yeah.
Everything I just said, you just
yeah, just because everyone thinks something doesn't mean it's true.
It's true. That's exactly right. Yep, that's a great way to put it. Yep. So I do want to mention too, before we finish, that oil prices also took a big hit, and a lot of folks feel as though it was because of the emergence again of the Omicron variant. And so just in 1 month, and I think that this might be a precedent, down almost 20% in a single month.
Yeah, amazing.
You know, from $83 down to $67. Exactly. A lot of people are cheering because the price of gasoline has come down.
Yep.
And by the way, that's not the result of a release of 50 billion barrels of oil from the oil.
No, a good percentage
of it is reserve.
A good percentage of it is just seasonal, isn't it? I mean, after the summer, the prices come down.
I don't know. I think this has more to do with the prospects of a slowdown, economic slowdown. Okay. That has to be what this is all about. This monthly change. That's my opinion. Yeah. I could be totally wrong.
No, of that size, I think you're absolutely correct. But
yeah. Some of it being seasonal, I don't know. The summer gasoline prices maybe, but not oil prices necessarily.
Okay. You're right. Yeah, you're right. That's a good distinction. Yeah.
Yeah. All right. So November, not so good in the markets, depending on how you're positioned. You could be cheering. Who knows? But bottom line is, stay diversified. Make sure you understand what you're investing in. Have a good asset allocation strategy, and it's a good idea to include alternative investments in your overall portfolio, and make sure that you're not investing too much in a single asset class or a single investment, because that's the one thing that I've found over the years that can hurt you the most, is if you get too enthusiastic about a single type of investment. That can really, really hurt you in the short term and eventually in the long run. So any questions about that, feel free to give us a call. Glad to talk to you about it. Lou, let's take one last quick break, and we're going to come back with this week's Talk Money tip, which is all about student loans.
Oh, excellent.
Very important information. So don't go away.
Whether you're saving money for your children's education, preparing for retirement, or deciding on the right life insurance plan, you can count on the professionals at Andover Advisory Group. Established in 1996, our company is responsible for providing financial planning services to individuals seeking sound financial advice. We create a comprehensive financial plan that serves as a framework for organizing the pieces of your financial life so that you can focus on your goals and understand what it takes to reach them. And a financial plan can help you prioritize. For example, how saving for college might impact your ability to save for your retirement. Having a clear perspective will allow you to pick the right strategies and confidently choose suitable products and services. Best of all, you'll have the peace of mind that comes from knowing that your financial life is on track. Call us at 978-691-5005 to book your free initial consultation. That's 978-691-5005. Hi, this is Jeffrey Shank, a chartered financial consultant and the host of the Talk Money Show. I've been helping my clients for more than 30 years, and now I'm going to help you. Join us to learn about the financial issues that concern you the most. You'll hear from the experts on a range of topics, get some great ideas, and it's all designed to help you make more out of your money. So tune in to Talk Money right here on Eagle News Radio.
Welcome back. Hey, Lou, you know how President Biden has been promising that he would forgive. That's the word I was looking for. Forgive some student loans.
Yes.
I don't know if he's ever going to
be a prominent theme of the last election, as a matter of fact.
I don't know if he's ever going to be able to make good on that promise, but
no
something important. If you do have loans, there's something important that you need to know. Okay, and that on several occasions, because of the pandemic, there has been a pause on payments. In other words, you didn't have to make any payments, and no interest penalties would be applied. Right. So it started in March of 2020, 6-month pause through September of 2020. Then the Coronavirus Aid, Relief, and Economic Securities Act came into play, and they had second and third pauses. The first pause was part of the Coronavirus Aid package, but the second and third pauses came via presidential executive order and extended the pauses through January of 2021 and then through September of 2021, respectively. And the fourth extension is now scheduled to end on January 31st next year.
January 31st. Oh, yeah. Okay. Next year. So
next year.
And a half from now.
Yes. So, yeah. So a little over a couple, a month or so, right?
Yep.
So you need to be aware. If you've gotten used to not making those monthly payments on your student loans,
now those are pauses.
You're going to have to start. I'm sorry.
Those are pauses without accumulation, right? It wasn't like you had to make up those payments. That was just a pause.
Correct.
Yeah.
Right. They're not forgiving those payments. You just didn't have to make them, but you also weren't penalized because they stopped accruing the interest.
Right. But in other words, when that stopped, you didn't have to make double payments or anything like that. It was just, they just strung out the timeline a little bit.
You're just, right. Exactly. They extended maturity date on that loan, basically.
Yep.
Yes. That's the way I understand it. I could be wrong about that, but I think that's the way it works.
It makes sense.
But you're going to, if you've gotten used to not making those payments, you will have to start budgeting that in starting February 1st, unless, of course, there's another extension.
Mm-hmm.
Maybe an extension pending some news that some loans will be forgiven.
An extension past the 2024 election?
Or exactly. Up to November of 2024, right?
Yeah.
So is it 2024? Is that the next November? Seems like so far away, but it must be. Yeah.
Yeah. Certainly past this November coming up, but
yeah. So who knows? But you probably should be aware too that there are some forgiveness programs already in place. So be aware of that. Just because the president hasn't made good on his promise doesn't mean that you can't have your loans forgiven, because there are certain programs in place already to forgive student loans. Keep that in mind. But if you are, the one critical thing about those forgiveness programs is you have to be current. You can't have any late payments on your loan. And so February 1st is going to be an important date. Make sure that you're ready to start making your payments, unless, of course, we get the news that they're going to extend that pause even longer.
Yep. Yep.
And that's this week's Talk Money tip, Lou.
Excellent. And that would be a good, all of the, you talked about financial aid and student loan payments on today's show. Those are great ways to use up that free consultation, right? That first initial sit down and ask some questions about these forgiveness programs, because I guarantee a lot of people out there are going, what forgiveness programs?
Exactly.
Yeah.
So call the toll-free number, 877-475-2062. Send me an email, jeff@talkmoneyradio.com, or just send us a private message over the Facebook portal. And don't forget to like the show, because when you do, you'll get updates, regular updates and notifications when we're going to go live. So just a reminder. And don't forget to take a look at the library. We've been doing this for quite a few years. We've accumulated quite the library of topics. So sort through that.
These programs, because you may not have a financial aid situation in your life right now, but I'm guessing you know somebody who does. They might find this
share it. Share it with
useful.
friends.
Yeah.
Yes, absolutely. Thanks for that reminder, Lou.
Yeah.
All right, so that's the end of our time today, but we'll be back next week right here on Talk Money. In the meantime, remember, good sound advice is much better than advice that just sounds good. Thank you very much, Lou.